Welcome to Fitz Factor, the show where you learn how to master the stock market with Dan Fitzpatrick, the stock market mentor. Dan is a savvy trader. He's featured regularly on Fox Business, CNBC, Investors Business Daily, and SiriusXM Radio. In this podcast, Dan shares his insights on trading, life, and attaining long-term success in the market.
Okay, so the other day I was watching the NFL draft with a good friend of mine who actually was an is an ex pro football player. And so we were watching, and the thing that came up pretty prominently was Shedeur Sanders falling to, I don't know, like he was almost at Tom Brady levels as far as where he was drafted, which was a big disappointment. Okay, well, I don't play football, so I don't know about that. But I was talking to him, and he mentioned that these are the attributes that NFL teams look for. They look for performance under pressure. They look for work ethic. Okay, if you're not going to work hard, then get the hell out of here. They look for adaptability. They look for humility and durability. All of those things are key attributes for a player who's going to come into the NFL and succeed. And that's all these teams want are players that are going to succeed. And this is not a judgment on whether Shedeur Sanders has any of those attributes or not. It's not what this is about. It's about trading. And so as he was saying that, I realized that these same attributes are actually very, very applicable to traders. And so I want to go through those. First of all, performance under pressure. It requires a trader to stay calm when the market moves against you. And markets move all the time. And if you've got money on the line, you do feel a lot of pressure. Now, one way that you can perform well is to make sure that you have rules. You don't have to call a lot of audibles because your rules are already set out before you make the trade. So this attribute actually, as far as performance under pressure, it's not minimized, but it's actually less critical if you have your rules, because that by itself kind of alleviates the pressure. And this leads to the other notion here, that you make decisions based on a process. That's what I'm talking about, not emotion. And so even when like fear and greed start impacting your emotions, you got to just stick with your plan. The point here, as far as performance under pressure, is that the winners are not the ones who avoid the pressure. They're the ones that operate well inside it. And so as traders, that's what we really, really need to be thinking about. Now, with respect to the second attribute, which is work ethic. If you want to be a successful trader, I'm telling you, man, you got to work, okay? This ain't trading places waiting for Billy Ray Valentine to set the price. You've got to be doing some work, and you have to come to work every day, even when you don't feel like it. You need to be tracking your trades because that holds you accountable, and that is part of the work ethic. You have to be knowing, you have to be managing where you are and always be looking to improve your position. And that means you have to study your mistakes and you have to learn your own patterns. Everybody has them. You want good ones, not crappy ones. You always want to be refining your edge and never assume that you know it all. We'll get to humility in a second. But the bottom line is this: with respect to work ethic, success is actually pretty boring. It's profitable as hell, but it's pretty boring. It's built on this quiet, consistent effort when nobody's watching. You're not pumping your fists when you make money. You're not banging the desk when you lose money. You know what? You're just going about your playbook and doing what you do. Now, adaptability, really, really key for an NFL player and also for a trader. Very much so for a trader, because markets change all the time, and guess what? There is no off season. So you have to accept that markets change and then adapt. And sometimes the adaptation means just pulling back and deciding that this is not the game I want to play in. We just don't want to even play this game. Trends end. Volatility spikes. Patterns evolve. They go through the process. You have to be able to adapt and not try to make things happen. One of the biggest mistakes that traders make is they try to make things happen. They try to force a trade. Let the trade come to you. That's what you have to do if you want to succeed in this market, and that does require some adaptability. You can't just be some dogmatic, rigid trader, because you ain't going to last very long. If you want to survive, you need to be adaptable. Now, humility. It requires a respect for the market. Don't give yourself too much credit, okay? You're never bigger than the market. The market always knows more than you. If you're losing money, you have one option and one option only. You don't have to go through your progression like a quarterback and the first receiver isn't open. You have one option. Sell. Just close the trade. Throw the ball out of bounds. But you have one option if you are losing in a trade. And this really truly comes not just for respect from the market, but respect for your own trading capital. Your trading capital is your stock in trade. If you don't have any money, you don't got no trades. Okay. So you want to always be able to and willing to, in fact, even be eager to admit when you were wrong and accept the consequences. If you don't want to take a big loss, fine. Get used to taking small losses because taking losses is a big part of trading. Great traders lose more than 50% of the time. They just don't lose a lot. So you want to take your losses very quickly. Don't blame anybody, even yourself. Just say, well, crap, the trade didn't work out. If you make a mistake and you didn't follow your process, okay, crap, I made a mistake. I'll do better next time. Where you are right now is the sum total of the decisions that you've made. So accept that and then just move on and strive to be a better trader. Humility is a good thing. And by the way, if you're not humble, keep trading. The market will give you humility and a lot of it. And then the last aspect of an NFL player that wants to succeed as well as a trader is just durability. Durability, availability is actually a skill. If you're a player that constantly gets hurt, you have to wonder, okay, what am I doing wrong? I won't go into the nuances there, but are quarterbacks holding the ball too long to where they're getting hammered a lot as opposed to just throwing it away and protecting your body? Same thing with runners, et cetera, et cetera. This ain't a football camp here. What I'm talking about here with respect to durability is mental and wallet, mental and money. You need to be protecting your mental capital, your emotional capital, as fiercely as your financial capital. You want to manage that risk, accept the bad trades, if you want to even call them bad trades. We'll just call them errant trades. Accept the fact that sometimes the market is not favorable and you're going to have to just deal with that. And that's part of being durable. Don't be so fragile all the time. You are not one trade. You're not your last trade. I've heard an old saying, and it's a stupid saying, you're only as good as your last trade. No, that's really not true. You're only as good as your last 200 trades. Trends matter. Trends in markets, trends in how you trade. You want to develop a positive trend and keep it going. You want to play the long game. All right. There's 4 quarters in football. I don't know how many plays typically there are in a quarter or in an entire football game. Let's just say there's a lot of them. So one play doesn't make or break you in football. A whole series of plays throughout the game puts you either in a position to win or to lose. You want to be doing things right so that you're always in a position to win. You don't have to win every day. You just have to stay in the game. You can do this stuff. So here's my suggestion. Before you start each trading day, just kind of perform a little mental checklist. Am I calm under pressure? Okay, how am I feeling? Am I prepared to do the work today? Did you come to work? Because if you didn't, that's okay. Push away from the desk and go golfing or something. Am I ready to adapt if conditions change? Am I really feeling dogmatic and I feel so strongly about the market that I'm going to ignore facts that compete with my sense of what should be going on? In other words, am I going to insist that what I believe should be going on actually does go on? Or am I going to be adaptable? Am I going to be humble enough when I make a mistake? We all make them. Am I going to be humble enough to say, okay, well, it's okay. I'll do better next time. It happens. I'm doing my best. Are you going to be humble or are you going to be arrogant and get all pissed off? And then finally, am I truly managing my risk? That's the first rule of trading. Manage your risk. Am I truly managing my risk so that I'm durable enough to stay in the game for the long haul? These are all things that are really, really important for you as a trader to think about literally every day. And by the way, you can go back and look at some of these things and maybe realize that they're actually pretty applicable just to life in general. Performance under pressure, strong work ethic, adaptability, humility, and durability. You be in here for the long haul. And the way you do that is to stay humble and work hard, be a thinking person's trader, and you're going to do just fine. Let's talk about the repetition of trading today. Trading's a really repetitive business, and guess what? That's a good thing. All right, repetition breeds familiarity, breeds success, breeds accomplishment. So here's the thing. Most profitable trades look the same. We look for patterns. You look for these recognizable patterns that have been very, very profitable in the past. And you do that again and again and again. And most of the time, those types of trades that come from those familiar patterns are going to be successful. Not always. It's trading. It's not winning. We're speculating, we're not harvesting money here, but most of the time these familiar patterns are going to do what they typically do. Okay, so your job is to find this sameness. When we repeat the same thing again and again, we get better at it, for good or for bad. If you're smoking cigarettes all the time, you get really, really good at it. You know just how to pack them down, just how to knock one out of the pack, just when to light it. It's a really, really cool action, right? But it doesn't work very well. On the other hand, if you know how to work out, if you understand fitness, and you're doing that repetition over and over again, you're going to get in better shape and live better life. Okay, but this isn't like how to be healthy with Dan Fitzpatrick. This is just how to trade in a very repetitive way. But be mindful of this. You can't kick bad habits. You can only replace them with repetition. I smoked, I don't know, 20, 25 years ago for a while. I was always trying to quit, but I never could. Finally, I realized what I needed to do was replace my smoking with something else. I also learned about what the mechanism of nicotine addiction was. After 3 days, your whole addiction is just mental up here. So I did what a lot of people do. I started using toothpicks, chewing gum, whatever. And I got used to whenever I felt like having a cigarette, I substituted with a toothpick. I didn't keep a pack of cigarettes around me, to tempt myself. Screw that. I wanted as far away from them as I could because I didn't want the temptation. All right. When you are trading the way you're supposed to be trading, temptation is not a part of trading. It's boring. It's repetition. You want to avoid this idea of seeking novelty in the market where you're just, okay, what are we going to trade today? It's not about, when you're thinking about it in that way, it's not about trading. It's about getting a dopamine hit. It's about getting some excitement. This idea of always needing to be doing something is really going to crush you because you cannot repeat that again and again and again. The market changes. So discipline actually is pretty boring, but your process is your edge. Your trading process. But boring can be profitable. Think about it. If we're action seeking, if we were always looking for something different, we like casinos. I hate casinos, frankly. Okay, we like horse racing. I hate horse racing. I've never seen a horse that I thought I could beat in a race. I don't like horror movies. I like action movies, but I don't want to participate in them. The bottom line is we need to be aware that boredom is actually a good part of trading. Process is a great part of trading, and it's going to help you make money. Think about Henry Ford. He was the guy that built the assembly line. He was the first one to actually start a manufacturing line where a car went from like one bolt and a nut, whatever, all the way through to where it was painted at the end of the line. It was really efficient. He made a crap load of money. But for the one guy in the assembly line who was attaching a bumper, probably wasn't too much fun. That's kind of like one routine trade. But when you back off and you look at your whole sequence of trades, you find that you make money. But think about it this way too. This is how rigid Henry Ford was to his process. He would say, hey, you could have any color you want as long as it's black. All right, so you think about this with respect to trading. You can trade any way you want as long as you trade according to your process. So this is what I want you to do. I want you to take a few minutes and sit down and write out the things that you're doing right, the things that work for you again and again, and then just resolve to repeat that. And then you should also, I think, write the things that you're doing wrong, the mistakes that you know you make. And my bet is you're only going to wind up making a couple of them. You're going to see the same mistake again and again and again. I went in too big. Damn, I only bought a few shares because I wasn't sure. Okay, that's position sizing. Oh, I chased a stock. Shouldn't have done that. FOMO. Okay. Oh, I sold at the bottom because I got scared. Well, should have sold before you got scared. There's all these different things that you can do to identify the things that are hurting you and also identify the things that are helping you. And then what you do more of the latter and less of the former, and you're going to do just fine. Also, as I typically remind people, track your trades, take accountability for your actions. Until you take accountability for every single trade, you're always going to struggle, okay? Track your trades. You can thank me later. Don't predict, prepare. This is what a good trader does. You don't need to guess what the market's going to do. You need to be ready for either scenario, up or down. Guessing is predicting, okay? Predicting isn't a strategy, okay? Hope is not a strategy. When you're guessing, you're going to be wrong often. If that was not the case, they wouldn't be guesses, would they? The market will make you emotional. It'll make you fickle. And also it can be really complex. Okay, don't let it do that. Your preparation takes you out of that vicious cycle. Reaction is your edge, not prediction. And your reaction is supported by your experience and knowledge. You'll see things earlier, all right? So in a stronger group, you want to be trading with the institutions. You don't want to be trading with retail traders. Stick with the strongest group in the market. Trade along with the institutions, never against them. Now, here's what preparation really means. Plan your stops, your targets, your entries before you trade. When you enter a trade, you should know before entering that trade exactly where your stop's going to be. Right after you enter the trade, you go in and you put your stop in, and then you move on. I've made that fatal mistake of not putting in my stop one time. Frankly, I just forgot about it. I knew where it was, but I just got busy. I forgot that I did not put the stop in. Let's just say that was a costly mistake that I've only made that one time. So put in your stops. Use those as methods to manage your risk. Know all of these things before you trade. And as far as a trading template, you want to have an idea of, like, fractionalize your money. What's my typical position size? Okay, what's a half of that size? What's a quarter of that size? These are all parts of preparation before you make the trade. You can look at a trade and say, oh, okay, well, you know what? I'm going to start with a pilot position. That's a small position. I'm going to put in a quarter of my typical position. All right, you know what that is. You don't have to get a calculator and try to figure it out. And you got to know exactly what your setup is before it hits, before the trigger hits. So this is all about preparation within your own trading structure.